Excellent. That's absolutely marvelous. Well, good to be with you this morning. Good many in the room there. Richard, Pan, Mark, Mr. C, Mr. C. Yeah, it's been some time. And well, almost too many to mention. But Elliot, John, Martin. Yeah, yeah. Bismarck. Hope all's well. Zia, Erkan. Right. Okay, guys. Well, what we're going to be talking about a little bit this morning is that I mean, it's all part and parcel of the currency wars, which we've been talking about for quite some period of time. And quite simply, we know what the currency wars are all about. They're about two things. Number one, it's about getting a competitive advantage against your competitors. Now, quite simply, if one were to reduce the value of a currency against the currency of a competitor country, then it just means effectively that your exports are going to be more attractive. They're going to be cheaper, and consequently, you're going to do better at it. The other side of that coin is that it can increase inflation if you are particularly dependent upon imports, and that's something that doesn't seem to be worrying anybody at the moment because most countries want some inflation. But it's the competitive advantage thing, which is the big one, and we've seen some massive moves over, well, the last 3 years, effectively, by just companies wanting to gain that competitive advantage. So what immediately happens then is that the country being hammered somewhat by it are then going to say, oh, we better do something about this, and then they retaliate with reducing the value of their currency and so on. And so it becomes a spiral. One leads to another, and you get another one leading to the next, and so on. And so round and round and round and round the spiral goes. And of course, it's a spiral which is going down the corkscrew because in order to reduce the value of the currency, then we've seen all sorts of things being used, all sorts of mechanisms being used in order to do that. And the chief one, of course, is interest rates, reducing interest rates, and we're now getting negative interest rates running across quite a number of our major economies. So there's a bit of a war on cash, and if anyone's got a lot of money just tucked away in a bank account, that's possibly the worst place to keep it because I mentioned negative interest rates, but there's always the possibility that there could be a Cyprus situation that could happen, and or indeed a Greek situation whereby we go along to the cash point, put our cash card in, and it says, no, you can't take out $100 or £100. You've just got to take out 20. And of course, if that were to happen, then we're going to be in a whole new realm of the currency wars, which will then come down to hit the citizens of those countries who have too much debt. So we're sort of on the edge of it. We've seen some of it happen already, and the big question, I suppose, is that will it happen in the major economies? Get a mattress, tuck it all away. Good point, Pan. And there's a lot to be said for that. And of course, we're also getting quite a number of commentators, plus one of the members of the UK body that sets interest rates coming out and saying, cash. Let's get rid of cash. The last thing they want is people to have money in a mattress, and also the last thing they want is to have a bank run. So if you outlaw cash completely, there can no longer be a bank run because you can queue up all you like at a cash point, and it's just set electronically, only to give you 20 quid when you actually want sort of 10 times that. So we really interesting times. Could be ahead, and of course the doom and gloom merchants are having a field day, and of course selling us lots of books on how to survive the time when there is going to be no cash available. So we're now finding that there's quite a run, particularly on silver coins, are quite popular because they're a low denomination value, and they can be used extremely easily to buy goods and services if the worst does happen. So rather than stuffing sort of pound notes in a mattress, regrettably, it's rather hard on the body, but fill it with silver coins. Fill it with silver coins. That's my recommendation. So there we are. Now, what about the second effect of the currency wars? Well, they're sort of semi-economic, as we've seen with a degree of manipulation with the oil price. The oil price, which has affected the likes of the Russian ruble quite dramatically, and of course it's had the effect of, to some extent, to a great extent, weakening the Russian economy. So it's a sort of an economic stroke political tool, which is probably a little more useful than lobbing a nuclear bomb in the direction of, or a little less damaging, I should say, rather than lobbing nuclear bombs all around the planet. So maybe economic warfare has got a little bit to commend it, as it probably doesn't result in quite so many deaths. However, there we are. Yeah, good point. Bear Grylls. He must be selling a lot of books at the moment. How to Survive in the Outback. In fact, there's a very interesting UK television program at the moment. It's called, what's it called? Can't remember what it's called. But people go off grid. They go off grid, and people then sort of try to find them, and it's quite a compelling little program. So, will the worst happen? The nature of the markets is that the more talk there is about a particular scenario which is likely to happen, by its very nature, it then means that it is less likely to happen. So I'm only too pleased to hear about all this doom and gloom that there is out there, because it is less likely to come to pass. What is likely to come to pass is exactly the opposite of what the consensus view tends to be at any particular time. Now, I don't believe that the doom and gloom scenario is the consensus yet, but once it becomes so, then you can guarantee that it just will not happen, and we'll get back to normal times. Very strange, that, normal times. I wonder what they're like. So let's just come round to look at what is actually going on with some of these major currencies. And we're going to get started today because we're going to get started on the US dollar, the DXY. And it's important to look at the US dollar because it is still the largest economy in the world. And of course, it is the tail that wags the rest of the dog. And the rest of the dog, of course, is the rest of the world. So whatever happens to the dollar has an immediate effect on emerging markets particularly. And the current strength that we've seen over this year, as we can see, it's where has it gone? It's gone nowhere. It's just moving sideways. This chart is just moving sideways. And I guess let's just run out to the weekly. Let's look at the dollar index on the weekly chart. We've seen the big run up in 2014. Okay, and that has caused all sorts of problems for emerging markets. It's meant that effectively, the fact that the dollar has gone strong has very badly damaged markets, emerging markets, export capabilities, etc. And will it now carry on up? There's a fair chance that we just might get something dramatically moving out of this scenario. So if we go right the way back to crisis times when it all started in 2008, we had these massive fluctuations. There was a flight to quality to the dollar, which so often happens when there are big problems. Then we get this massive whipsawing, which ran then throughout the three latter quarters of 2009, and then we get another run up, flight to quality, and then we get this sort of move on down. Since then, sideways, we then get the big run up. Now, this is all very well, but where is it going to go from here? Well, I guess that there's a fair chance that what we may well find is that let's just see if this will run out to monthly for me, and there's a fair chance that we just might get this dollar index moving up to previous highs. And so just look at it. There we are hovering now, having popped up to 100 and come back. Is it now ready to make the move right the way on up to 120? Now, let's just do a little bit of technical analysis. And if we just take this current move and we run a line up, okay, to the, well, more or less to 100 there, not too worried about perfect accuracy. We'll put another little line across this correction, and you can see what I'm going to do. I'm just going to project up from that level. Now, if we project up from that level, that would suggest that we've got an ABC move in the making. We've got a measured move in the making, okay? A move, corrective B move, which has now been going on, as you can see, for months. And, well, all this year, effectively. And then if we do, and it's a big if we do get the breakout, then the chances are that we're going to see the dollar moving all the way up here. If we do a little bit of Fibonacci also, what we can actually see is that if we stretch the grid then between the high and the low, the target level is the old high, and there it is. It's a target there at that all-important Fibonacci level, 88.67, 88.7. And those who follow harmonics, which I know there are a good many in this room today, will recognize it immediately as the bat level. So could it happen? Could we see that run up there? Well, based on the latest data that we've had out of the US, the non-farm payrolls last month, which disappointed yet again, as they have been month on month, and in fact we've had 2 months of disappointing numbers coming out, so that all of the hype that there was behind this big run up in the US dollar, it would appear that hype now has been completely and utterly unmasked, and by unmasking it, it's really shown that the economy, the underlying US internal economy, is just not strong enough to have sustained this rise from 80 up to 100, and it's also suggesting it is just not strong enough to sustain the next run right the way up here to this suggested target level, which is going to be sort of 110 plus. So that's just a conflict now that we've got between this technical situation and the reality on the ground, or at least the reality of what we currently know on the ground. Let's just consider one other little technical factor here, and that is a very, very clear set of candles. Now, anyone who's into candle analysis will be able to look at this and look back, not this month, not last month. Okay, so if we go back now 5, so 1, 2, 3, 4, 5 months, we've got an inside month. Now, inside candles, or Hallmey candles, tend to be quite important because they're a little bit like a doji in that the market hasn't a clue where it's going. Well, that's self-evident because we're in a trading range. But the important thing is that, number one, it broke out on the upside, and then the month after that, which is the third month back, it actually broke on the downside and completely negated that inside day break. In fact, it went lower. It went lower than the inside month. The inside month. And that in itself was bearish. But we then immediately get a snap right the way back into the middle of the trading range with a long, long, long tail. And the tails on the candles tell more of a story than the body does. It tells us that, yeah, okay, well, it popped down there. Where did it find support, by the way? It found it at that previous peak way back in 2005, 10 years ago. 10 years ago. And it's about 10 years ago that we last had an interest rate rise in the US. 10 years. 10 whole years. And what we've now got is we've got a potential breakout this month. Now, if we look back to then just 2 candles back, we can see that September was characterized then by a go nowhere month. It went down a bit, long tail, and it's gone up a bit. This month we could well get the breakout. Now, where you got long tails, it suggests 2 things that could happen. We could, as a result of the long tails, argue that there are so many buyers down in this area that all of the sellers have been completely mopped up and the balance of power is now on the upside, and we just might get an upside breakout because of that. So that's what I'm looking for here on the dollar index. Despite the bad news that we've had over US interest rates, the prospect that interest rates will not rise, then the dollar index is still reflecting the fact that it wants to move higher. And so that's where, at the moment, on my view of this market, the balance of power on the technicals is on the upside, but on the basic fundamentals of just the internal US economy, it just does not support a breakout on the upside. So there's a real conflict. Wherever you've got conflict, one of those situations is going to be wrong, and we're going to get a move. Now, we might get this major move on the downside. We might get a major move on the upside. What is it that could possibly trigger all of that off? Well, I guess that there's more of a story than the internal US economy, and that is the need for dollars across the world. If there is still a strong need for dollars across the world, which there most definitely is, then the chances are that the market will ignore the internal US economy, and that need for US dollars will propel the US dollar considerably higher. So anyway, that's the key market. It's the dollar. We've just got to wait and see, of course, if any of that is going to follow through, because all of the other markets will take their cue from it. Now, let's just consider a couple of other things. Let's just consider, first of all, this one. Let me just remove all of that grid. And we've got the euro. Now, the euro back in 2001, look at the lows there. Under 90, under parity, ran all the way on up. We've then had several crashes on the way down. This is then a mirror image of the dollar index that we've just glanced at. What is going on here? Is this a halfway house? Will it run on down? If that scenario of a stronger dollar works out, then, yeah, this should just follow suit. Well, it will follow suit, and it'll run on the downside. If we look at the internals of what is going on here, this little consolidation zone running throughout this year is the opposite of what we've just been looking at. And how do we read this? Well, again, we need to read it with a great deal of care. On the one hand, it looks as if we just might get this breakout on the downside. On the other hand, we just might get it running on the upside because we've actually had an attempt at pushing higher, which has been pushed lower. So it's the opposite situation. And what we've also just got to consider is that what's going on with European QE? Well, the reality appears to be that the European economy is actually not doing too badly just at the moment. And it's starting to look a little bit that we're finding that European growth just might be a little bit better than US growth. And so the amount of QE that has been going on in Europe has actually probably had the right effect to encourage the European economy along. So we've got lots of little tensions all building up here. And it's almost suggesting that on fundamentals, we're going to see a higher euro and a lower US dollar. So watch this space. And the key is that October is the month. It's the month where storms happen. Storms. Both the weather version of storms and the market version of storms. We've seen some dramatic moves. And the one to watch is this breakout of the inside month of September, both on the euro and on the dollar. Right, folks. Well, I mean, all of that's all very well, but let's just go and take a little glance now at the British pound. Now, the British pound, we are constantly told by the UK Chancellor of the Exchequer, you have to actually use the words "you've never had it so good," because that was something that came out, many decades ago from a Labour Chancellor, I believe it was. But we are constantly told about the economic success, which is the UK economy. And we're told that there are more people in work now than there have been over a number of previous years, etc. And it's all sort of rosy. So the question is, why is the currency not recovering strongly then? Why is it that cable is struggling to hold its current levels? So we're looking at this monthly chart, and the monthly chart then, it did have a little bit of a run up. It looked as if it was going to break its way strongly higher from this trading range. And what happened? Exactly the opposite. So we're tending to find now that cable is starting to look very vulnerable indeed. So let's just bring this down to a daily and just look at that. Is this now an area where we might get a lower breakout? Well, we've had various trading ranges before. Let's just look at one that ran on for quite some period of time. We had this one. We had this little range. It broke out on the upside, and then it did what cable does so often. It then broke on the downside very, very heavily. It came back up to a Fibonacci level, by the way, and then it just collapsed on down again, and it's broken this low. So we've got two possibilities. Which way is this one going to go? Are we going to see a continuation of this current downtrend and a break much lower, which is going to take it to 150 and possibly right the way down to the bottom of this chart? Or indeed, are we going to find that it will recover and bounce on back up after this little breakout? Well, got to wait and see. But price action is starting to suggest very, very strongly that all is not well with the UK economy. And we're finding this degree of weakness is starting to have quite an effect. And this brings me back to the currency wars. The UK and the Europe are strong trading partners. For the UK, then if there was no sort of European economy that we could sell things into, we'd have a bit of a problem. And what we're seeing is that this rate, the Euro GBP, from this low level, we've got an area down here where price actually broke down at the beginning of the summer, and it looked to all intents and purposes that we were going to see much, much lower levels. But what has actually happened is that over the last couple of months, this euro has been getting much, much stronger against the British pound. And indeed, we can look on this pattern as being something of a flag. Classic flag. Breakout on the upside. Well, we've seen the breakout on the upside. There is no great weakness coming in at the moment. And let me put forward this scenario that I've been arguing now for, well, a couple of months. And that is that there is an encouragement from the UK Chancellor to allow this to happen. So this could be a nice little version of the currency wars when the British pound is allowed to weaken against the euro, giving the UK economy a competitive advantage. And that's exactly, well, what is happening. We're seeing this move on up. So there we go. And, of course, there are so many questions behind all of this, but we cannot deny what the charts are actually telling us. So, Pam, let me just come back to that one. But what about all the talk of the euro reaching parity? Well, yeah, it may happen, but it's so often the case. We get so much talk about something, and it becomes sort of locked into traders' psyche that it just doesn't happen. It just doesn't happen. It'll happen when everyone's talking about the opposite happening. And then, John, what about possible GBP interest rate rise? Well, yeah, absolutely. I mean, it would appear that based on all sorts of things, certainly the numbers that we're looking at, some of the UK numbers have been sort of reasonably encouraging recently, and the currency just hasn't responded to that. It has not responded to it. So there's a little bit more behind all of this. Maybe it could be the fact that the UK's debt in relation to GDP is absolutely enormous, and the benefits have come through to a very great extent to the economy so far from immigration, greater contribution being made by immigrants to the economy, etc. But the problem is that the spending just keeps on carrying on. Indeed, the borrowing requirement just keeps going up. Any suggestion of ever getting back to the Thatcher years of getting a balanced budget is just cloud cookie land. You can see those pink pigs, the ones with the wings. Look out your window. You'll see them going past. You'll see them going past. So there are other things actually happening here that look really quite interesting. And Pan, at the moment, then this is an upside bet at the moment. And it has been an upside bet. So we've just got to wait and see how all of this pans out. And the question I seem to think needs to be asked, and it is, will the Europeans embark on more QE, or will they decide not to? So there we are. Now, let me just bring up the monthly chart of this, and I just want to show you this. This is the Euro GBP monthly. Okay, it's been moving down quite dramatically, and it dropped down to 7.70 pence, and at that level, it looked very much as if we would just get a continued down move, and we might. This little rally that we've just recently seen, it just might cave in, and we're going to get much, much lower levels. But we've had this bounce, whilst then there's been talk of an increase in UK interest rates at a time when supposedly the UK economy is doing really, really well. and we've actually had this bounce in the euro against the British pound. And the big question now is, could there be more to come? Now, I'm just going to put on the grid. If I put the grid on, we can see that the lows that it came down to here at 70, and let's just put a line across there to emphasize this. This is an area of support. We know it's support because price has popped up. What is support? Well, it just means that there are buyers down here. There are bargain hunters who look on the level of 70 as being good value. And they've been buying. And they've been buying over, then, the last couple of months. It's an area where we've got a lot of prior price action, where price spent 2000, look at this, 2003 through to almost halfway into 2007. 4 years were spent in that region. And price shot up from there. There will be a lot of funds, traders, dealers, banks, financial advisors, the whole, CTAs, the whole sort of raft of people who will look back and say, oh, we missed out on that big run prior. We missed out on that big run in 2007, 2008. We should have been on that big run. And that could be all there is behind this little rally at the moment. But what we've got a completed harmonic bat. The thing is completed. And a bat pattern is an incredibly powerful pattern when it works. As with all things, it doesn't always work. As with all patterns, when they don't work, they're just as powerful as when they do work. But this is the pattern completed. And there we go. We bring it right the way on down to what they call the PRZ, potential reversal zone. And price has decided to pop up from there. So could we find that the unthinkable, which is to have a much, much stronger euro against the British pound, could that actually happen? It could. It could. Right. Okay. Well, that's one that I've sort of been looking at and following for quite some period of time. And what it's well worth, I just want to look at a couple of other things which have relationships to other areas, and I'm going to look at the US dollar against the CAD. Now, the US dollar against the CAD has been moving up, as indeed the dollar was moving up, and we've found it wants to just keep on going. Now, bear with me a second. Let me just bring up another chart. I can just pick the right tab. What I want to look at over the same period of time, let's just run that out to a monthly, then let's just look at this. This is oil. This is the US light crude contract. And if we just look at this most recent tumble, now we obviously know what happened with oil. It's a highly politicized commodity, and in terms of just conventional supply and demand, then we know that as world GDP has been retreating, demand for oil has also been retreating. But of course, it can be held up. It can be manipulated up by those with deep pockets. And of course, that's sort of largely OPEC, who want to try and keep a high oil price. And then it just collapsed. Well, why did it collapse? Well, yeah, I mean, supply and demand was allowed to come into play. And, the manipulation to try and keep the oil price up was just sort of held back, and it was then allowed to collapse. And of course, it's one of the reasons behind it. It could be that the Saudis looked at all of this shale, fracking, etc., and there was going to be a lot of oil coming onto the market at the high levels, and so they decided just to take out all the frackers. There will be, and there are umpteen junk bond defaults in the fracking sector, the exploration. We know that high-priced exploration in the Arctic. We've got major oil companies are pulling out of that, and it's possibly worked quite nicely for the Saudis. The other conspiracy theory, of course, is it was allowed to collapse for in order to collapse the Russian economy, which relies totally on oil. Whichever one you believe, it's all very well. But what we've got to just watch is what is going on with price. So we get this tumble, and let's now just whiz back to that chart there of of the loonie US CAD, and of course you can see we've got the mirror image. So as this goes higher, the US dollar goes higher, then the CAD is going lower, and the CAD is going lower partly then because of the lower oil price. And we know that Canada is one of the major higher cost producers of oil. So that's entirely logical. If we now come back to look at this key commodities again, let's bring this down to a daily chart. And what we've seen is that, we have this big tumble down to 40. There was then an OPEC meeting in August, or was it first week in September? Can't quite remember which. And although not a great deal was publicized there, you can bet your life that there would have been a number of OPEC members who were saying, look, enough's enough. We can't stand it anymore. We've got to have oil prices up. We've got to have them up. And consequently, we get a rally. And if we look at this quite neatly now, we can see that this little rally has produced a triangle. We've got a very, very clear triangle, and this is going to break out. And there we go. Look at that. It's attempting to break out. It hasn't done so decisively yet, and the suggestion is that it just might want to break out on the upside. Now, let's go back to, and if it breaks out on the upside, is that going to be good news or bad news for the Canadian economy? Well, it's going to be good news. So let's go to the daily chart of the US dollar CAD. And what we can see is that, the US dollar was stronger against that ever weakening CAD. But look what has just happened. It has just put in a potential reversal. And the key level on this is going to be 1.3. So there we go. Look at that, 1.3. And if that level goes, and of course we see the oil price break out on the upside, this is going to be a superb play on the downside. But it's not quite ready yet. It's not quite ready yet. So that's one of the key ones that I'm looking at and waiting to see if we're going to get some dramatic moves there. Now, let me just see if we can run this back to the weekly, if it will. Yeah, we most definitely can. And there is a candle pattern here, which is telling us that last month, September, went higher, then it went lower than August. And that is a potential key reversal. So that was last month. This is, sorry, I get my months muddled up. I'm getting a little bit too in front of myself. Thank you, John. Yeah, so this is this month, October. That was September, completely engulfed August. And that could be a key reversal month. So we just might see some dramatically lower levels in the loonie, which will then start to run it back to some of the key support levels, the first of which will be that previous peak. Right, so there we are. That was that one. Now, we've got about 5 minutes, and I just want to talk about the the Australasians for a moment. So let's go and take a look at the, see if we can get the monthly chart of the Australian. Yeah, there we go. There we go. So what's been going on with Australia? Australia, we know they are a very large producer of commodities, and commodities, particularly those that come out of the ground. We know all about the fact that there are gold mines in Australia, and we know all about the fact that they produce a lot of aggregates and a tremendous amount of iron ore. And indeed, they're producing even more right now. I think, is it Australia's richest woman? What's her name? Reinhardt. And she has just opened yet another massive iron ore mine. So what we've actually seen with the Australian dollar, it's moved on down, and it's moved down together with all of the various panics which are coming out of China, or at least the headlines which are designed to make us all panic about what is going on with China's slowdown. So this has just reflected China, plus their own internal economy has had all sorts of little sort of problems along the way, such as the boom resulted in ridiculously high house prices, as indeed has happened in Canada, caused all sorts of internal problems. And then, it's been some suggestion that they would drop interest rates, and they wouldn't. Anyway, progressively they've sort of had to drop them somewhat. What is actually going on right now? Is this just going to continue on down? Are we going to get a massive break down to the down to the lows there of at the bottom of this chart of 60, or indeed are we going to get something else going on? Are we going to get something else of a recovery? Well, let's come down to the shorter term chart of the New Zealand dollar. Because the New Zealand dollar is an interesting economy, if you like. It's an agricultural economy. It's one that is rich in natural resources. They have energy literally coming out of the ground in the terms of hot wells. And they have had to adapt their agricultural industry, which was purely sheep at one point. They are the lowest cost producer of milk powder in the world, and some of their farms are incredible to look at. But what has been going on with the New Zealand? Well, it's also caught the China cold, and it's been tumbling down somewhat. So, is the China situation quite so bad as all that? Are we maybe believing too much about the massive China slowdown? Well, we just might. But what I think is a more interesting play is the interaction between the Australian dollar and the New Zealand dollar. So what we can see on the monthly then, we've had both of them just sort of tumbling, as we've just seen, but the Australian has tumbled more and faster than the New Zealand into this downtrend, and it ended with almost a key reverse month. We've then had price action pop up really quite dramatically, and this is the real key. Do you see this little white line? And that is the key level. Price managed to get itself above that key level. Found some support. Are we going to find that this is now wanting to move higher? Let's just knock this down to the weekly and see what it shows us. Well, what this actually shows us is quite an interesting pattern. It shows an interesting pattern. If we come right up to where we are right now, then we've got a trading range, and what we've got is a breakout on the downside. So that immediately suggests that we're going to see much lower levels, and it'll run on down following the original trend. But there's another way of looking at this. And we could look at this in exactly the opposite direction. We could look on this as being a reverse head and shoulders. Left shoulder, right shoulder, head. If price were to break out now on the upside, which seems incredibly unlikely just looking at this chart, but if it were to do so, that would be a humdinger of a play, and it would reverse everything that we know about the dreadful situation that Australia is in because of China. I mention this because if we can now come down to the daily chart, we've got one of those important levels again. Now, this consolidation. It's been running over a long period of time, and we've got a low. We've got a low. And if we project that to the most recent low, it's at that important bat level. This is not, I hasten to add, a bat pattern. It's not quite got the right characteristics for a bat pattern. It's got some of them, but not all of them. But it's at the level. And the key for me is if price manages to drop down there below that low, okay, and that's about 180, it's just under, well, it's about 108.20. If it can drop below that level, then yeah, you know, it's a downtrend. We're in the downtrend. But what you so often will find is that we'll get these little false breaks, and this area is an area of support. We know it's support because price has popped up before. It's gone from this lower part of the trading range to the upper part of the trading range. Could that be about to happen again? Well, price action last night or yesterday and today is suggesting that that just might happen. And so I'm waiting to see now if we're going to get a further rally on the upside. And if we run this down to a shorter term 4-hour chart, it hasn't shown a clear reversal yet, but it could do. We've got several very strongly bullish candles. And the interesting thing is, will it manage to get itself above a key level? And that key level is right the way up there. So it needs to move reasonably substantially higher in order to make that breakout move. If it will, then I'm looking at the possibility that we're going to get a really strong rally here. So there we are. Shared with you some of the things that I'm looking at the moment, and some of them are looking at it in exactly the opposite to what the sort of consensus view might suggest. And I think it's healthy every now and again to absolutely question everything that we think is the truth, if you like, the truth in inverted commas of what is going on. And just finally, I'm going to leave with two little suggestions here. Number one, stock markets. Well, we got the rally in the stock market coming as a result of the non-farm payrolls. Disappointing. So bad news for the economy is good news for the indices, and we get this run up. How much more upside is there? Well, there may well be some more upside, but I just wonder if the whole stock market complex is getting to the point now where they're starting to think that if there is more QE, which of course, you know, we've seen it bolster the markets. Whenever there's been QE, it's like, you know, they've just put an injection of adrenaline in the markets. It's gone chasing on up. But could there now be a degree of exhaustion with further accommodations, further lower interest rates to try and keep the whole market bubbling up? The exhaustion could be coming in because the reality is that, as we know, the QE has only benefited asset prices. It has not benefited the major economy. And so consequently, that just might be dawning on stock markets across the world. So there we go. And the final one to look at is gold and the precious metals. We've not seen it yet, but at some point, the inflation that we know is going on, we've got stagflation effectively, we've got inflation without growth, and we're starting to find now that just maybe, some of that is being reflected in what is going on with precious metals. Now, we've got two levels to look at very, very closely. We've got a range that we can just bound by reasonably recent activity. At the upside here, we can see that these have been support zones, but then it's become a resistance zone. So that's a really important level to be broken. And equally, the one down below here towards 1100, it used to be 1100 to 1200. It is now tighter. It's between 1100 and 1160. Get outside of either of those, and on the upside, the inflation story is the one that will really be the true story. On the downside here, it's going to be deflation is the true story. And at the moment, it is not at all clear which one is really going to come through. Yeah, interesting, Pan. Yeah, you're absolutely right. Struggling with deflation, and that really is the story. That really is the story. But of course, we've had inflation in foodstuffs. We've had inflation in staples such as housing, and so we've got pockets of the world economy which are in inflation, and we've got pockets of it which are in exactly the opposite, which are in deflation. And so it's a tug of war. It's yet to be resolved, and I actually maintain that the gold price will tell us which one is the real story, which will really come through. Okay, folks, well, that's it for now. If you want to get in touch with me about any of this stuff, then don't hesitate to drop me an email or get in touch, but certainly do maybe sign up for my newsletter, and we'll keep in touch that way. All the very best to you. Good to be with you, and I hope that you found something of use this morning from this, and I hope it wasn't too depressing. Bye for now.